Okay, everyone, welcome back to Growing Your Tree of Prosperity. And today I'm just going to demonstrate a short exercise on how the folks in my community would use some quantitative information to look at market trends. All right, and so what we are going to do today is that I will demonstrate how to use a trend following algorithm written in a Python Jupyter Notebook to actually look at what's trending in the markets right now. And what this algorithm does, it crunches information and data on significant asset classes represented by key exchange traded funds or ETFs. And so it takes in information from Yahoo Finance on major ETFs that represent asset classes like stocks, bonds, real estate, cryptocurrency, and commodities. And what my algorithm will do is that it will rank the top 5 ETFs based on momentum. And with that in mind, you are then able to take these trend numbers and trend rankings and compare them with geopolitical events so that we can have a very clear idea of what's actually happening to the financial markets right now. Okay, and before I begin, I'd just like to spend some time explaining what we mean by our momentum measure. Okay, so what we do is that for a stock, like for example, the Dow Jones Industrial Average, we look at returns from the past 1 month, 3 months, 6 months, and then 12 months ago. And we take these numbers and we average these numbers up. Okay, if the number is positive, it means that the stock is trending upwards. And if the number is negative, then the stocks are trending downwards. All right, so this is a very elegant and simple way for us to have a certain grip on what kind of stocks are trending right now. Okay, and so now it's time for me to switch over to my browser to do a demo on this robo-advisor that I've written. Okay, so what we are seeing on my browser now is a Google Software as a Service like web app called Google Colab. All right, you will see colab.research.google.com. And what it does is that it allows me to write Python code and execute it on a remote server. All right, and this file that has the extension IPYNB, it's a file known as a Jupyter Notebook. Imagine it's like a Word document, except that instead of containing text, it contains a computer program that can be run remotely. All right, so I'm just going to demonstrate a quick way on how to run this trend follower algorithm. All you have to do is just press the play button to load up all the important libraries into the remote server. Okay, it looks like we are actually done loading the key libraries. The next thing we are going to do is we are just going to run the library import commands. And as you can see in this program, we get to customize it any way we wish. We could come up with the ETFs that are currently in our radar. As if you recognize these ticker symbols, you will know that it covers different asset classes, right? And we are going to shortlist 5 ETFs for further discussion. All right, the rest of the numbers, my students will know how to actually tune them to actually get optimal results. All right, and this is what we do. And once the data download is complete, it will do a dump as to the kind of data that exists. All right, so we will quickly go through that, and we click play again. And this is the section that actually crunches some numbers. It goes back in time, and it would imagine, you know, on this particular day, what would the ETFs you would have to buy at that time in history, and then it would allocate accordingly. All right, so the robo-advisor that I've written would do all that for the student, even though execution would still need to be manually performed on the brokerage front. Okay, As you scroll down further, there will be some code to actually perform the visualization of some of the results that we have. Okay, and as you scroll down, you will find that this is a graph that shows how the trend following algorithm would perform over time, which is actually very good because the red line is the 60-40 portfolio and the green line is our trend following algorithm. If you look at the results, our results are very much superior, okay, compared to the index, all right, at least up to March 2025. Okay, but that's not the main part of what we want to do. What we want to do is we want to see, imagine at this point of time, what are the ETFs that are trending right now? And if you run the final cell, right, you say that on the 10th of May 2025, these are the ETFs that are trending right now, all right, which also is about time for us to end this demonstration, and we will go back to the PowerPoint, and I've actually already cut and paste the results over to our presentation. Okay, so we are done with the demo. All right, so let's talk about what's trending on the 10th of May 2025. What my software has done is that it's listed 5 ETFs that is important to everybody, all right, and I'll explain to you what each ETF stands for. All right, it is also then ranked according to the weight or the proportion of your capital that needs to put into the ETF, right? And I'm now going to create another slide that ranks the ETF momentum so that we know what's trending from the weakest to the strongest. Okay, so at position number 5, we find that equities have come back into style, and this is the Vanguard ETF that covers global equities. At 4th position, you will find a sentiment-based equity ETF called BUZZ. All right, so that's number 4 on our list. An important development is that Chinese tech stocks have been seeing very strong momentum as of these few weeks. So you find CQQQ to also be part of that mix. But the 2 big winners and what's trending right now is, first of all, gold. And gold is experiencing strong momentum thanks to the Trump tariffs and fears of a US devaluation. Right. And finally, Bitcoin is actually just trending up from the past few days. But because Bitcoin is highly volatile, you find that whenever Bitcoin is trending up, it tends to become number 1. If it is not trending up, it would disappear from the list entirely. So now we have an idea that generally speaking, gold and equities are doing quite well in the financial markets right now. Okay, and what is our interpretation of our results? All right, it is likely that equities are slowly returning into fashion after Trump's willingness to strike a deal with the United Kingdom. But I just want to remind everybody that investors should remain cautious as negotiations are occurring piecemeal between countries and will take quite a while, right, for the negotiations to take place. And do realize that small countries like Singapore may take even longer to come up with a deal to offset the 10% tariffs. Not mentioned on this slide is that the possibility of the escalation in the war between India and Pakistan, that might also be responsible for some flight towards owning gold, right, for many people around the world. Okay, all this is just a demonstration of what I teach my students in the All-Weather Portfolio Masterclass. We teach students how to run Python programs. We teach them how to tune robo-advisors, and using these programs, we're able to get additional insights on the financial markets that is probably very hard for a retail investor to be able to get, right, using their brokerage tools alone. Our Python programs on this trend follower algorithm has returned more than double that of the 60 and 40 portfolio, with a risk-adjusted return that is almost double as well. All right. If you are interested in knowing more about the All-Weather Portfolio Masterclass, you can register your interest with Dr. Wealth at the link that I provide. All right. We will run a class the moment we get a certain critical mass of students who are interested in this program. So we do not regularly run this class, and this is largely demand driven. So that's all I have for you today. Thank you very much.